Good evening, everybody. All right, we're still kind of in the summer doldrums. The only difference between the indecisive trading of the summer is now it's indecisive trading on a daily basis. So we're back to analyzing the market trend based upon signals and the T-line. As we can see in the Dow, they haven't been able to bring it back up above the T-line. That same scenario is in the S&P 500, but the NASDAQ, as you can see, is just trading slightly above the T-line. And you can see where it's trading, right smack dab at the same level it's been trading all summer. The only difference is it's trading slightly above the T-line. So if you combine that analysis with the Dow and the S&P trading below the T-line and the NASDAQ trading up above the T-line, the only scenario you can really come up with is there's really no direction to the market still. Mel, I hope it's just you. You'll probably have to log off and log right back on unless you're logged on twice. The other side of the coin is if we could find sectors of acting strong, but as we can see in crude oil, it's still just kind of hovering in here, not really going in any major direction. I would suspect it's caught in a downward wedge. Gold, absolutely no direction at all. Interest rates, just a very, very slow drift. So the bond prices are very slowly backing off, which means interest rates are very slowly going up, and I say very slowly. As you can see, there's not really much movement on this chart. So the only thing I've been trading right now is live cattle, because you can kind of observe the obvious here of what the trend looks like. And you can pretty much draw a trend. Oh, even do a trend channel. How's that? Do a trend channel. And you can see it's kind of bounced off. I guess I could have come all the way up here and done this. Really goofing that up. But you can see we're kind of at the bottom of the trend channel down here. Probably coming up here, so that makes for a decent trade. The grains are all kind of just waffling around. Not a whole big powerful movement on soybeans. Definitely not on wheat. So not a whole lot to trade out there. Everything seems to be moving sideways, which comes right back to our analysis of what the whole market in general is doing, is moving sideways. The biggest factor that we should be looking at on the Dow is that they haven't been able to get it back up above the T-line. And the NASDAQ, even though it's just above the T-line, isn't moving in any direction with any great resiliency. So right here, we're right at the same level it's been trading at for the last 6 weeks. So that doesn't mean you can't make money in this market. As a matter of fact, knowing that the market's not selling off and the market's not going up allows you to make good money on the chart patterns that are working. And we'll kind of, I'm just going to go through some of the ones that we've been working. The fry pan bottom on CVRR. Now, this may not look good as far as it trading back down here, but they had shown that there was some trading on Friday afternoon at that level. If you go to your 10-minute chart, you can pretty much see I guess it was up here. Let's see, am I looking at this correctly? Yeah, that the spike up there has disappeared, and that this was kind of your level of trading. So really what that's telling us is it probably closed right around in here. I would still suspect we're going to head for the 200-day moving average. So that's coming out of your fry pan bottom. The same with, I'll get to it. I didn't put everything in order. But a couple that are really showing up right now very obviously is the bobble pattern. Like on AGIO, we recommended that on Friday, and we recommended it today. There's your J-hook pattern, more obvious, the bobble, because it hit the resistance level, pulled back. You can see what it didn't do at the T-line. They couldn't close it below the T-line. Was an institutional trade. It should not have been in the tick. Oh, 400,000 after hours. Was that on Friday? All right. All right, another one. Again, this is why kind of illustrating the wanting to know what your price patterns represent. As we can see in INVN, bounced right off the 50, did a double doji sandwich, and kind of came up through the 200. So there's your breakout. I'd still be a buyer of this one on positive trading tomorrow. And that was kind of what we're going to be looking at on NVIDIA. If it opens positive, another double doji sandwich setup. Let's make this a little bit bigger where we can see it better. And if this opens positive and starts trading positive, I'm anticipating you be in another wave of this magnitude, which is about 14 points. That would take you up into the $78 range. LC also came out of this fry pan bottom, and it did a bearish engulfing signal today. So not a bearish engulfing, dark cloud. Notice it gapped up above any of the previous day's trading and closed not below the previous day's open, but most of it. So there's only one thing you can do with this one tomorrow. It has to open positive and trade positive to stay in it. If it opens lower, they're probably coming back down to test the T-line. So you close it out, see what it does at the T-line. If it bounces right back up, you can always buy it back again. Things like LMCA came out of that fry pan bottom, did a big spike right up to the 200. Now you're getting a little J-hook pattern. Tells me there's probably some more upside to this one. If this moved basically from 21 to 28, that should take you up to the $34 area. All right, we've got some that they're just kind of non-evaluations, meaning NPTN. Don't have to do a whole lot of evaluation here. That's a steady eddy, J-hook pattern. If this is wave 1, wave 3 should take you up into about the $21 to $22 area. Notice what it's doing. The big fry pan bottom, classic J-hook pattern, next wave to the upside. So I'm kind of illustrating these patterns tonight because when the market moving sideways, you can see there's still stocks out there that are creating very good profits based upon their patterns. XNCR, when it broke through this little downtrending channel, and it did it with a kind of a doji sandwich, that tells you just stay long until you see a sell signal. At this point, you're up in the overbought area. Where's your safety stop? Just below today's low. It shouldn't come back in that direction. ARIA, another kind of little J-hook, J-hook fry pan bottom breakout on a bullish engulfing signal. Another one, very simple. You're now up in the overbought condition, did a doji, don't want to see it trade back below today's low. Is sound cutting out for everybody? You might have to log off and log right back on again. All right, so it might be individual servers. Gold is not doing too much, but something like Guru, you just stay with as long as it doesn't close below the T-line. Another steady Eddie in the making, CC, J-hook pattern. You just stay long on this one. We recommended Bison because of that same setup, a J-hook pattern. There's your fry pan bottom, there's your breakout. Came up from 7 to 15, 8 points. That takes you up into about the $22 range. So if you didn't buy it today, you can still buy it if it comes back up through today's open. That tells you the J-hook pattern is in progress. If you owned it from before, you just stay long as it stays above the T-line. Now the biotechs are acting better, as we can see in the Labu chart. Same scenario on the Labu chart. It broke this downtrending channel, supported right on the 50, starting back up. That means you want to start looking at the biotechs with a little bit more scrutiny. Exact. Wouldn't be afraid to be buying this one on positive trading. Again, probably a fry pan bottom breakout. There's your first J-hook pattern. Now you're setting up for the next J-hook pattern. The J-hook pattern has relevant information. It means after a strong price move, there's profit taking. And as you can see in this profit taking, it wasn't very convincing. It was very indecisive. I told you they weren't selling with any great rigor. Next move up, pulling back, not any great rigor. I'd get ready for the next move to the upside. Again, these are all setups that at least put you in high probability situations. Let's see, before I forget, we'll do the biggies. Amazon, still a nice, slow, steady uptrend that you stay with as long as it stays above the T-line. Apple did a kind of an evening star signal. Probably closed a little bit too weak today, and I don't have the 3T line on here. Why not? I think it was just at the 3T line. So very simple analysis. This one has to open positive and trade positive tomorrow to stay in it. If it opens lower, they're probably coming back down to test the T-line. Actually, the 3T line is a 3 exponential moving average. The T-line is the 8 exponential moving average. Very effective for trend analysis. And now that I'm talking about trend analysis, I'm getting a lot of requests to do training on the cloud, the Ichimoku cloud. Is that of interest to everybody? And the reason I ask is I don't really use it because it's always, I get a lot better readings just using the T-line and the signals. Ichimoku, okay, Ichimoku. Ichimoku. If I say it 3 times, I won't forget it. Ichimoku. That's true. We can have Hubert present it. And the reason I have kind of stayed away from it is if you throw it on here, it still doesn't tell us a whole heck of a lot. All it is a kind of a confirming indicator where a resistance level might be and a support level might be. So anyways, all right. Okay. All right. Now I lost my place. Apple. Okay. Netflix. Netflix just isn't anything. It was in the process of doing a bobble, but with today closing back below the T-line, it's still not there. And Tesla you can be buying. You know, it's probably in a trend range, so definitely watch to see what it does once it gets back up to the moving averages and just above that level. Let's see, back up to some of the things that are working. We own Western Refining, and the analysis on this one is very simple. When it broke out through this level, notice the T-line crunch pushed it right through the 200. All you can do on this one is stay long. And there was another refining. Oh, was it ALJ that people were watching? Percentage-wise, I think this still has to have a breakout of the fry pan bottom. Is that an island reversal on Netflix? Down here, yes. That was your island reversal. Now you're right back up into the congestion area. This over here, this is what I'd call the island reversal. I keep losing my spot here. CVI, nice big fry pan bottom. And the nice thing about this one is, even though it might not be a real hefty mover, just for it to get back up to the beginning of the fry pan bottom is going to be about 7 points on a $15 stock. So you're looking at about a 45% return just to see if the pattern is going to work. So wouldn't be afraid to be owning that one. YY was one that had the potential of a bobble pattern breakout. Came up once, came up the second time. So right now we're in it. We're just going to stay long as it stays above the T-line. Looking at CWEI is one we have in portfolios, just a steady eddy. Nothing wrong with this, kind of your little J-hook pattern here. If this is wave one coming out of this, there's a little slow curve breakout. You just stay long on this one until you see a sell signal and a close below the T-line. People were asking about G-Pro, which has a nice looking chart. Also doing a scoop type pattern coming up off the 50. I'd be a buyer on positive trading on this one tomorrow, especially if it came back up through today's open. And AMBA was also following along that lines. Another one that I'd be buying on positive trading. Again, J-hook pattern in progress. And this is where you can very easily observe the obvious, which was, notice on the pullback after the hanging man signal, where'd they pull it back to? Right smack dab to the 50 and started back up again. So I wouldn't be afraid to be buying this one. Consider anticipating it's going to create a steady eddy for a while. Let's see, I think that's all the ones we've been following. Some that were pointed out today in the chat room. NOMD, J-hook pattern setup. That's a good looking chart. AMAT earlier was acting well, gave back a little bit, but another one that you can just stay long as it stays above the T-line. Again, when they do these backing and filling, and somebody was asking what backing and filling meant, it really means it's kind of profit taking, but not really a reversal, just kind of getting some of the selling out of the way and then starting back up again. I would just stay long on AMAT until you see a sell signal, a dramatic sell signal, and a close below the T-line. EXAS, another one that you can be buying on positive trading tomorrow because you can kind of see that it's broken this little downtrending channel. NTAP. Wave one, wave two, bullish engulfing, little doji gap up. Another one that you don't need to be too hesitant about buying. You could almost consider this a big fry pan bottom, even though it's not real smooth, but it's still got the same result, a big breakout to the upside. AKS, that's a good looking chart. Again, this is where you can use your convergence analysis, which is basically as many pieces of bullish evidence as we can put into our analysis. Look what it did down here. Long tails, long-legged dojis, hammer, left-right combo, gap up through the T-line, breaking this downward trend channel, stochastics coming up, bounced right off the 200. Where's your next likely target? Probably up here at the 50. There's a little gap to fill here, so I'd kind of figured get it just above 5, which would essentially give you about a 25-30% upside potential. What is the light blue line? That's the 20-day moving average. Do all the long wicks indicating selling concern you? Oh, I don't know which one that was. It depends on where the stochastics are. Now, if the stochastics are up here in the overbought condition, yeah, that wick becomes a little bit more concerning. Wicks to the downside here in the oversold condition tells me, yeah, the bears keep knocking it down, the bulls keep stepping in. Get ready for a reversal. And CAVM, another piercing signal, double doji sandwich, another kind of little doji sandwich. Positive trading would break it out. Wave 1, wave 2, wave 3, wave 1, coming from 37 to 57, 20 points. That could take you up into about the $73, $74 area. And PRTA got a good looking J-hook pattern in progress. I've been chasing after this one for the last 2 days, trying to buy calls. Unfortunately, the calls are relatively thin, but the stock is a good trade. And keep an eye on SQ. There's your fry pan bottom. There's your J-hook pattern setup. I wouldn't be afraid to be buying this one on positive trading. Again, this is a 3.5 point move, 4 point move. This is taking you up into about the $15 range. Is your 200? It's the major moving averages. The 50, the 20, and the 200 are simple moving averages. The T line is an exponential, 8 exponential. CSTM, getting ready. Look for that J-hook pattern breakout. EAMS, another one that if it starts moving positive, you can see the pullbacks. This pullback right to the 50. This pullback right to the T-line, bouncing off the 20. Positive trading would take you right back up to the top of the trend channel, which would bring you up in this area, a good probably a 20% upside. FGEN. There's your double doji. This is just to kind of point out that when you have a doji smack dab on a resistance level like the 200, a high probability trade is, if it opens positive the next day, you can start buying immediately because it's going to move in the direction how they open it. If they open it positive, what's all the information it's giving you? Number one, it's doing our doji rule. It's going to move in the direction how they open after a doji. Number two, it's telling us this 200-day moving average isn't acting as a resistance anymore. Number three, it's telling us this level is not acting as a resistance anymore. So when everybody can see that, if we know what the doji rule is, knowing that the probabilities are pretty strong that if they open up positive after a doji, it's going to trade positive, we can be buying here with much more confidence to be able to take advantage of that price move. So that's why you want to know what your doji sandwiches are, your double dojis. Double doji setup is something like this that we saw in NVDA today, where it traded positive after the doji. So same simple rule. We're not anywhere close to the overbought condition. If it opens positive tomorrow, we still have the possibility of a magnitude move like this. If it does that, what's it tell us about the resistance level? It's not acting as a resistance anymore. Steve, no. Remember, everybody knows there's a Fed meeting coming up Wednesday. Everybody's making their buy and sell decisions prior to that. We're just seeing it, what the results of those buy and sell decisions are in the candlesticks. So just because something's happening doesn't necessarily mean people aren't making decisions. A little mini scoop pattern, yes, on NVDA. Where's their next likely target? Well, if you take this, I could bring you up here into the $75 area, which is not an uncommon situation. If you see a trend and consolidation, they'll move rapidly right back up into that trend again. So this area right here becomes your high profit, high probability trade setup. Oops. CHKP stays short. You can see how the kind of the belt hold failed right here at the 50. Then you had a doji sandwich below the T line. They've never been able to get up above the T line. If this opens weaker tomorrow, kind of breaking this support level, now we got a wave 1, wave 2, wave 3 in progress. You can be shorting this one. We shorted KFY last week. You had the doji gap down, and then there was your bearish doji sandwich. Kind of have a big rounding top. Even though you're in the oversold area, there hasn't been any buy signals. And nothing here to tell you that this would be a support area in here. So the logical support area is to come down here and test the recent lows. WBMD, big break. Downtrend. Slowly rolling over. Doji, big break to the downside. That magnitude right here could be the same magnitude right here. You might see that as a short tomorrow. And PAYC, same scenario. Notice when it broke, they're now coming up and using the T-line as a resistance, and they failed this level right here, making the potential of coming down here. People always say, well, don't gaps get filled? Yes, they eventually do. So that would be a likely target, that if this keeps selling off, we could be coming down here to test the 200 and or filling that gap right there. And TRIP, same scenario. Wave 1. Now we've got a left-right combo. There's your kind of your bearish double doji sandwich. Broke this support level. Could have a wave 3 to the downside. That was about 10 points. That would take you down into about the $50 range. And then Royal Caribbean. You can see how you've had the slow curve. Stochastics heading back down. You're right here on this support level. If it trades lower tomorrow, there could be a big vacuum move to the downside. Can a bullish Harami candle be red? Red inside red. Yeah, that's called a homing pigeon. It's still a Harami, but it's not as strong as a Obviously a red candle followed by a green candle. Still basically tells you the selling has stopped. You just definitely need to see more confirmation that the buying has started. Okay, I think, this is kind of the example of where you get the whipsaw coming out of a fry pan bottom. I know a couple people in the chat room were still in this one and got some good move to it today. That would have been a hard one to hang in there with, but it would have been on the same criteria. See, that would have been hard to hold on to with it closing below the T-line. Yeah, they had a good ruling. And then true left-right combo. This is where you use all kind of the common sense that we know about candlesticks. Where do most people sell? They panic sell at the bottom. Anytime you see a gap down in the oversold area, start looking for buying. We had 4 or 5 days of indecision followed by a left-right combo. That pretty much tells me probably your uptrend is about ready to start. Is there an option that substitutes for crude oil? I think UWTI is the three leveraged ETN. Okay, that's about all I got tonight. Are there any general questions on candlesticks? For those of you in the Houston area, just a reminder, I'm going to be, I guess, talking up in the Woodlands on Monday morning at 8 o'clock. I think oil, I don't know if it's leveraged at all. Okay, yeah, hopefully they will be in good shape next week because I'm sure the Steelers are going to walk all over them. That is on the what is next Monday? The 26th. I guess the sessions start Sunday. Guess they've got 6 or 8 speakers. What is a double doji sandwich? Which way does it go? A double doji sandwich, we know what a doji sandwich is. That's a bullish candle, a doji, followed by another big bullish candle. A double doji sandwich is a big candle, a doji, and then a positive trading where you have 2 dojis in there. If a stock gaps up on the open, do you jump right in? I'm taking it for granted. What I usually do is if I see something confirming, I give it a few minutes to make sure it was buying. Now, on this one, on a positive open today, I probably would have, I may have even jumped in. But would I have been scared out? No. What was the whole purpose of this purchase? What was the classic J-hook pattern followed by a fry pan? Or J-hook pattern? No, fry pan followed by a J-hook pattern. So right now, if I had bought in on positive trading and it didn't really do a sell signal today, you just stay long. Do you use the 10-minute chart for entry? I do if, let's say let's try to figure out something here. Let's say we think we're in an uptrend right here. Let me see if I can cut that chart off right there. Nah, I can't. So just pick out this spot right here. Let's say we think we're in an uptrend because stochastics are heading up. We're staying above the T-line. And the next day it opens down here, comes back to the T-line. So it's not showing anything real positive. Then it starts coming back up. Then I'll flip to my 10-minute chart. Now, that may mean after about 20, 30, 40 minutes, it's sold off, and then the buyers step in. So if I'm following a stock and it's trading off in the morning, but then as the market starts moving up, it's starting to move back up, confirming the buy signal, yeah, I'll probably be buying it off the 10-minute chart. NVIDIA, where does a shooting star occur? When your stochastics look like this, not with them coming up. So right now, we're still in an uptrend. We're still above the T-line. Yeah, that could be a shooting star, but the probability is say that was just trading positive consolidation. Now I look for bullish confirmation after that. Yeah, and look at the pattern. Got a scoop pattern coming off the 50. So remember, you're looking at the signals, where they're occurring stochastic-wise, and where are they occurring in a pattern. You got stopped out of Momo. There's nothing wrong, Captain Paul, of getting stopped out and then buying back again when you see that it's not continuing the pullback or the suspected pullback. And same scenario in AGIO. Now, I don't know where you would have gotten stopped out, but even if you got stopped out here and a few minutes later you saw they were still buying, you buy back in. There's nothing wrong with getting stopped out at 45.40 and buying back in at 45.85 because you're not buying this for a 45-cent move. You're buying this for another 8-point move. So 40 cents is just insurance that you're not holding on to something that's going the wrong way. Let's see. Do you have any educational material on position management? Morelli, all I do on position management is every position's equal dollar amount. And if I decide, based upon the size of my portfolio, say it's a $500,000 portfolio, and I decide I'm going to buy 10 positions, each position is $50,000. And the reason for that is our biggest bugaboo as far as bad investing is our own emotions. So if I put on 10 equal dollar amount trades, I know that most of them are going to work. But if I decide that one is better than the others, then I've already kicked in my emotions or my ego into that position. So that if it isn't working, I've got my ego involved already. And I'll say, oh, I'm going to hang on to it so everybody else can see why it should be going up because I evaluated it going up. I'll probably hold on to it an extra couple of days and then get out with a bigger loss than what I should have. Instead of saying to myself, this unit is not working, close it out and move on to another unit. Okay. With that, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. I think we did SRPT. I would suspect that's going to be on a 45 degree. You're probably going to have to play that off your 10-minute chart from here. IRDA, Bob, that might be a lap. Whoops, that's DuPont. DDD, you can stay long on this one. As you can see, the flare or the The Zing has gone out of DDD after its initial big run up, but right now you're just in a slow uptrend. Nothing here of any great consequence. You just stay long. Costco hasn't been able to get back up above the T line. I'd be shorting it at 149, knowing that it did a bearish J-hook pattern. EOCC, all you can do right now is stay short on this one. Ever since the kind of little dumpling top breakdown. And XIV. This one you can get ready to buy on positive trading tomorrow. That'd be your doji sandwich breakup through the T-line. Sports performance. That's a scoop type pattern. Notice your cradle pattern down here. Right now you want to stay long as it stays above the T-line. Just make sure your volume stays good. SPX, another one that has to open positive tomorrow to stay in it. Kinder Morgan, that one's kind of gotten choppy sideways. If you like it, it better open positive tomorrow, then watch to see what it does at the $23 area. But right now, it's just a very slow uptrend, and it's not a good, steady uptrend. So, in short, I'd probably be someplace else. Trox, you can be buying this one on positive trading. A doji sandwich breakout of this little downtrending channel, giving you some more upside. Again, just use the T-line in your stop. GIMO, notice when it broke out of here, you had wave 1, wave 2, you're in wave 3. Another one you stay long, but at this point, notice the little gap up today in the overbought area. Put your stop at today's open. It shouldn't come back down through that area. And Fold, here's your slow curve, bullish engulfing, breakout. I'd still be a buyer of this one on positive trading tomorrow. That's a good looking chart. STWD, the REITs all seem to be holding up pretty well. All you can do here is stay long as it stays above the T-line. TTMI, that's a good little scoop pattern with kind of a doji sandwich breakout today. Stay long on this one. Let's see, what charts do you use, and do you have a tool to write notes on them? I think there's probably a tool to do that. I've just never done it on here. Let's see. Cursor and tools. I'm sure there's a way to write notes on here if I need to, but and that's probably something you could ask General Room if anybody knows of chart service where you can write the notes right on the charts. Micron, this one you get ready to close out. If it opens lower tomorrow, you've had kind of that belt hold. This is what you call a meeting line. Notice how they took it up, closed it, gapped up, and came right back down to right where they opened it before. That's a bearish signal. SGY hasn't been able to get out of its own way. I wouldn't be long or short this one. There's no direction to it. And Salesforce, right now, all you can do is stay short. There's nothing you can say about this one other than, yeah, I would stay short on this one. Matter of fact, that will get a little star. Why you just stay long as it stays above the T-line. It should be in this steady eddy uptrend. So yeah, this one you can get ready to buy with the hammer doji gap up. I would suspect it's going back up to the top of the trend channel. And AVY, another little scoop type pattern. You can be buying this one. Just be very observant as to what it does once it gets up to this level. CMCM, another one that's not really all that hefty. I'd be more apt to buy it at 1380, knowing that it broke through the 200. If you're long, you can stay long on it, but just watch to see what it does once it gets to the 200. Green Plains Renewable Energy. Nothing wildly exciting here. It just has to stay above the T-line to stay in it. HZN. Did I do something wrong here? HZN. That one's not coming up. INT. Nothing here to get excited about. I wouldn't be long or short this one. SRPG, you're going to have to play that off the 10-minute chart. XLP, nothing here. Obviously, you're right close to the 200, but there's no buying yet. If it breaks down through the 200, you stay short. If it starts showing some strength here, you start covering your short position. SGYP, looks like it's trying to do some consolidation. I wouldn't suspect or wouldn't doubt that it's coming back to test the T-line. Notice it got pretty close to the top of this trend channel, or this trend channel. Tells me there's probably going to be some consolidation back to the T-line. SORL, you just stay long on this one. Now you're in the overbought condition. Just as a safety factor, put your stop right here. If today's open, it shouldn't come back down through there. If it does, you know there's a strong change of investor sentiment. ETE, you stay short if you're short. I wouldn't be a buyer of this one until it does get back up above the T-line. Jack, you can be buying this one. It's not a very prolific mover, but it should come back up at least to the 50 and probably to the bottom of the trend channel somewhere up here, but that's only a 7% move. Whole Foods, nothing wildly exciting here. I wouldn't be short at this point, but I wouldn't be going long until it does close above the T-line. This is the same thing as Labu. Get ready for a breakout through this level to tell you the biotechs are still acting well or acting weller. Yard, nothing here yet. I wouldn't be short anymore, but I wouldn't be long until you see a strong buy signal. First Solar, stay short. Remember, the bigger the signal, the more compelling the change of investor sentiment. And MNK, you stay long, but this one has to open positive tomorrow to stay in it. Nugget is just kind of basing, not long or short in the golds right now. Nothing major going on. And Herbalife, Richard, yeah, or maybe even later tonight. Herbalife, I wouldn't be long or short this one, no direction. Facebook, never like to trade this one. There's just not enough movement there. If you're long, this one has to open positive also tomorrow to stay in it. Zebra, that's a good doji sandwich breakout. I wouldn't be afraid to be buying this one on strength. And MOH did have a strong day till the close. I'd still be a buyer of this one on positive trading. There's your left-right combo. There's your doji sandwich. I'd be a buyer on strength. You can see the trend channel should bring you back up in this area. MCRB, just stay long. You're up here in the overbought condition, doing a hanging man doji. I'd pick a spot down here. It shouldn't trade off. If it does, take profits and come out of CVI. You stay long on this one. That's a good fry pan bottom. Let's see, we did PTCT, right? That one, look for a 45 degree. If you take more small losses, you can take more small losses following your stop out plan with fewer wins with large gains and be profitable. Don't be afraid to get out of a trade if it's not. Exactly. And that's all part of that process of cutting your losses short and let your profits run. Candlestick signals make it very clear whether it's confirmed the reason for you to be in there or not. If it's not, close it out and move on to something else. Farzad, no. Now, I trade all the stocks. I don't necessarily trade the biggies all the time because you get much better percent moves out of the smaller stocks. Remember, we're buying the investor sentiment, and it doesn't matter where it is, whether it's in a big stock or a small stock or big cap stock or small cap stock. So that's why I try to have people learn how to do the scans for themselves, so they have 4, 5, 6, 8, 10 possible trades the next day and see how each one opens. LCI, not very exciting, but as long as it stays above the T-line, notice it did a bullish engulfing signal off the 50. I would stay long as it doesn't close back below the T-line. Netflix is kind of soggy. If you got into it today on positive trading, I'd be back out of it and be ready to buy it if it comes back up above the T-line. CZRR, again, this is not a true figure up here. It actually closed right around here. So you're still in an uptrend. I would still suspect you're heading for the 200-day moving average. Did we do Tazar? Tazar, you can get ready to buy this one on positive trading tomorrow. REF, well, we don't know whether the big move is over yet or not. Right now, all you do is stay long. Mato, I will trade the some of the ETFs, but they're using the 3 leveraged ETFs like Nugget or UWTI. The reason for that is the candlestick signals tell you which way things are going, so I might as well get as much volatility or as much leverage as I can. So I'm always going to kind of go with the most leveraged. Okay, I think we got them all. Oh, and we closed out before 9 o'clock. That's amazing. So with that, everybody, we'll see you bright and early in the morning.